Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 13th, the day before Valentine's Day. So make sure you guys get out there and do that last minute shopping to take care of your significant other. And if you're a guy, insignificant other. Just kidding. Anyway, my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Usually I start with some economic data, not a whole lot to go over today. We did get Great Britain CPI year over year, came in at 3%, was expected to be 2.9%. So a little bit better than expected. That generally good for the overall economy. And then we also got here in the United States, the NFIB Small Business Index came in at 106.9, right in line with the expectations of 106.2. So doing well there. National Federation of Independent Businesses Small Business Index is really what that is. So it tells us how the small guy is doing in this economy, which is the main driver of any economy. It's the smaller businesses. It's the mom and pop stores that really drive the economy. That creates velocity of money, whereas a really big institution or a real big corporation doesn't drive velocity of money nearly as well as the small businesses. All right, on to the overall markets. Ahead of tomorrow's crude oil inventory number, we have crude oil pretty quiet right now, down about 20 cents, still in that 59 handle. As you can see, this 38.2 Fibonacci level really holding strong as support. We've settled above that 2 days in a row. It looks like we're kind of toying with settling above there as of right now. It's still early in the day, of course, but it is acting as support, and I think it's pretty much a consolidation ahead of tomorrow's number. Now, that being said, anytime we get these opposing dojis like this, that is a continuation pattern that we've talked about several times in the past couple of weeks anyway, about how when you get these opposing hammers, that is a continuation pattern. This is looking like tomorrow we could drop down quite significantly if we continue with that thesis, for lack of a better phrase. All right, anyway, gold futures moving higher by about $2 today. Overall equities, I don't think is a real driver of this, although the Dow Jones is down and things of that nature, so it could be a slight flight to quality. We are looking at the Bitcoin futures right here, down a couple hundred points, almost $300. It looks pretty tight though, and getting very comfortable right here. We've moved our value area where our most volume has been spent is right here at this 85.60 area, 85.60, let's call it. That's where the most volume has been exchanged in the last several days. I've switched this over from a 15-minute chart to a 30-minute chart, just so you guys know and aren't confused by that. That's how we're getting this, all the way back to, a couple of Tuesdays ago. Onto the bonds. They're moving sideways right now, down by about one tick. So that's unchanged for all intents and purposes. I am looking for this to get a little bit of a bounce going here. We've had a long duration of sell-off here. I think it might be a little bit overdone here. I think they're getting ahead of themselves on the Fed interest rates. So I think it might be a little bit overdone. We might see a little bit of a push higher, especially if we can consistently see any more equity weakness. VIX is positive slightly by about 70 points or 70 tenths, I should say. Still in that mid-20s area. Dow Jones down off 100 points. You would think, that usually what we've gotten used to is a 100-point move in the Dow is a pretty decent day, but that is nothing in comparison to what we've seen the last couple of weeks now. But the Dow Jones off by about 100 points, but really feeling very inside day for all of the equities, with the NASDAQ down about 15 points here on the day, well below the trend channel here. I mean, that could be made up in in one of these last several days that we've seen, but I don't think it's going to quite make it there today. And right now, 50-day moving average running lockstep with the trend channel that I've drawn in there. E-mini S&Ps sitting here right on this 38 Fibonacci level. The bulls are going to try and get it above there. They tried yesterday. It looks like we slightly settled above there. It's going to act as resistance still. We settled above there. That would give the bulls a little bit of hope. Confirmation pattern. We get this bottom with the tweezer tops. Confirmation to the upside. I think that we're just taking a breather today. Not a whole lot of economic data coming out. It's going to be really news driven for the most part. But right now, E-mini S&Ps pretty much having an inside day, as we can see here on the 30-minute breakdown of the E-mini S&Ps. This is daily segments here. Each one of these blue areas is 1 day's session, overnight included. And then, as you can see, overnight inventory got a little bit short, but at the end of the day, I think it was pretty neutral. And we have stayed neutral today, inside day. Just nothing going on, you guys. And I turned down an opportunity to go up north for 10 inches of fresh powder. Would have been the first day out on the slopes this year for me, and I decided to turn it down because the markets have been so crazy. And then, of course, today everything locks down, so I haven't really done a whole lot. Not any earnings that I'm going to look at. I mean, I looked at who's giving out earnings, releasing their earnings today and tomorrow morning, and nobody that I'm going to trade. So today is kind of a wash for me so far. I'm going to be still trying to dig around, trying to look for things to do, but at the end of the day, I'm kicking myself for not hitting the slopes. So sorry about a abbreviated. Actually, I'm not sorry. You guys are probably happy about our abbreviated morning commentary, but just haven't really found anything to do, and that's why I'm kind of getting this out a little bit late. So I'm struggling to try and find something, and not yelling at myself all day for not being on the mountain. But that's my story, and I'm sticking to it. Anyway, Friday's webinar is going to be on the risk reversal, so check it out. It's not going to entail as much risk as we looked at for the synthetic long and synthetic short, but it is going to still give us a nice directional assumption, give us a little bit less than 100 shares of the underlying, and I'll show you how to set that up so you're not trading with 100 shares. So if you don't have a lot of money in your account, this is going to be a great strategy for a directional play. It'll give you some pretty good payout for the correct directional assumption. I'll show you how to set that up to increase your probabilities of success. All right, so go to protraderstrategies.com and sign up for that. If you can't take that, I missed it totally. I'm off today. Take that. Maybe you didn't get that. There we go. Take care.